Industries and organizations all over the world are trying to reach new heights. By continuously achieving their vision, plans, and objectives, organizations are finding different ways to motivate and sustain high potential employees to achieve their targets. Employee compensation is a vital part of human resource management and personal management. Industries are working very aggressively to fine tune the pay for performance for their employees, but still, the majority of disputes are related with the remuneration only. Despite the aggressive work on the part of organizations towards pay for performance and other compensation, the mind of employees are still crowded with, will they get a fair pay for a full day work or not? Hello everyone, I am Dr. Vijay. We'll discuss about pay for performance and financial incentives. After taking this lecture, you should be able to understand the different terminology used, describe the structure of pay for performance and incentive plans. Finally, you will also be able to describe the most popular plans. Before understanding the core concept of pay for performance and other incentives, let's understand some key terminology. Compensation refers to a range of financial and non-financial benefits or rewards to employees for rendering their services to an organization. It includes monthly salary, bonus, paid holidays, medical facilities, maternity leaves, holidays, etc. However, wages is the aggregate earning of an employee for a specific period of time, such as a day, a week, or a month. Wages are paid mostly at the lowest level of the management, let's say to a laborer, where the quantum of services rendered could be counted or be measured. Alright. However, salary is a compensation paid to an employee for services rendered to an organization. It is usually associated with the office staff, supervisors, managers, etc. Got the difference between the two? In case the quantum of services cannot be counted exactly, then the payment made is called salary. Hope you are clear with the difference between wages and salary. Then we have the fringe benefits. It refers to compensation given to employees over and above wages. It is not directly related to the output or performances, etc. It includes benefits such as housing, subsidized food, medical, crutches for children, etc. etc. It also includes payment for time not worked, like holidays, sick leaves, etc. Hope you are clear with the different terminology and you could make up the easy difference among the key terms. Okay. Pay for performance are divided into two parts, that's on the basis of fixed payment plan and variable pay plans. As the two names suggest, under fixed pay plans, the employee will get a fixed amount of remuneration. However, in variable, it will keep on varying as the case may be. Fixed pay plans are applicable on individuals by means of piece wage system and the time wage system. However, variable pay plans are applicable on groups and on complete organizations. Let's understand these one by one. At first, we'll cover the individual plans, then group, and finally, the organization plans will be covered. Let's start with the individual plans. Piece wage. It is a system or method in which an employee is paid on the basis of output of work. Alright. Here the output of work is quantified, that is, it can be measured in numbers. Okay. Pay is based on the number of items produced or processed by each individual worker. For example, the payment will be paid for the number of units produced in a day, per hour or so. It is calculated as wages equals to number of units produced multiplied by rate per unit. Okay, now let's see these. When the rate of the different units or items produced remain the same irrespective of the number of units produced, this method is called as straight piece rate or straight piece rate system, as the rate remains the same. It is the oldest and the most common method of payments. In 1906, F.W. Taylor introduced a differential piece rate system under which two different wage rates are prescribed, that is higher rates and the lower rates. Higher wage rates are meant for efficient workers and lower are meant for the inefficient workers. Alright, let's take an example. Let's say Mr. Lee gets $1 for assembling one smartphone. And if he assembles 50 phones in a day, he will get $50 for the day. Alright. If Mr. Lee assembles 79 smartphones in a day, how much will he be paid as per piecework system? You can refer to the answer in the description box. Then we have time wage. Here the time spent on work is the basis of payment. The period of time may be an hour, a day, a week, or a month, etc. Alright. It must be remembered that wages are paid after the completion of time only. Irrespective of the output or completion of the work, it is a non-variable method of wage payment, as the wages are paid on the basis of time worked only, or we can say it is a fixed pay method. It is calculated as wages equals to number of hours worked multiplied by rate per hour. Suppose a worker is paid at a rate of rupees 50 per hour and he worked for 100 hours during a month. His wages for the month will be rupees 5,000. If he works 180 hours in a month, how much will he be paid? You can have your answer in the description box. Till now we have seen the individual plans or the fixed individual plans. Okay. Let's understand group plans. Group variable pay plans are a kind of pay incentive to a team on the basis of overall team performance or output. There are three ways or approaches to achieve it. The first is to set a work standard for each member and then calculate each member's output. Let's understand this. In this approach, we are concerned with the first approach. In this approach, the payment can be made in three ways. The first is all members will receive the same pay as earned by the highest performer or producer. Second option under this approach is that all members will receive payment as that of the lowest performer or producer. Or the third way is that all will get equal pay as per average of pay earned by all the members of the group. Alright, so in this case, organization can ask the group to opt for either of the options given in the first approach. Alright, the second approach is to set a production standard based on the output of the group as a whole. Payment can be made by piece rate system or time wage system. However, time wage plan is more preferred. Third approach is to attach reward or pay with the goals based on some overall standard of the group or team performance. For example, standard time taken to produce 100 items or units by a group can be taken as a parameter to set goals and attach their pay or rewards with that. Alright, clear with the three approaches? Finally, we have organizational plans. Many organizations have incentive plans where most of the employees can participate. They are taken as a means of option by the employees. These are of three types, namely, the first is profit sharing, then we have employees stock option plan or ESOP, and the gain sharing. We'll be covering profit sharing and gain sharing in this lecture. You can take ESOP in our lecture titled Employee Stock Option Plan. The link is also there in the description box. Let's understand these one by one. Profit sharing plans. It is a plan where all or most of the employees who opt this option shares organizational annual profits, or we can say the employer shares the percentage of profit with the employees who opt for this plan. All right, these are of three types. The first is cash plans. In this, the organization distributes a percentage of profit, usually between 15 to 20%, as profit with the employees on regular interval, and the interval may be quarterly, half yearly, or yearly. All right. Then we have Lincoln Incentive Plan. This plan was first introduced in the Lincoln Electric Company at Ohio, US. In this, employees work on piece work basis, that is number of pieces or units produced, and the firm distributes annual profit each year among employees based on their merit rating. Okay. This Lincoln plan also has scope of suggestions and the employees whose suggestions help in certain savings to the organization, they are also rewarded with a percentage of that saving. Okay. Finally, we have deferred profit sharing plans. In this, the firm places a predetermined portion of profit in each employee's account under a trustee's supervision. An amount is shared with the employees based on projection of profit in future, and the employees are motivated to achieve the projected profit so that they can have the profits which has been shared with them. All right. Then we have gain sharing plan. It is an incentive plan that involves many or all employees to attain the productivity objective of the firm, and finally sharing the gains. The two most important group sharing plans are Scanlon, and the second is Rucker and ImproShare. Scanlon is an incentive plan developed in 1937 by Joseph Scanlon and is designed to encourage cooperation, involvement, and sharing the benefits. Similarly, the Rucker and ImproShare plans encourage sharing and productivity. All right. Can you differentiate between the two? Please feel free to give a feedback. Thanks for patience learning. Thank you.